Okay, so there are certainly a few things here to talk about that are of incredible importance for the ticker symbol GME. And I got to say that one of these occurrences only happen about, let's just say, every 8 years, and we are approaching that here in the medium term. And in the more immediate term, we are also about to experience something that happens only once a year or twice a year. So there are a couple things that I'd like to talk to you about here. Am I feeling bullish? Am I feeling bearish? We're going to go ahead and go over all of those details here in this video. But before we get started, what is up, everybody? Please do me the favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. My name is ARCa. Let's go ahead and get this thing rolling here, guys. Okay, so we're going to start this off with the more simple things, okay? We're going to start this off with not so many daunting effects and all kinds of statistics. I know that some of you who have been watching the channel for this long haul here, or the short term, right, know that I'm a numbers guy, right? I'm more of a statistics guy. So let's go ahead and take a look at the more simplistic things, okay? So things that I can help you understand. So we're going to go ahead and take a look at something called divergences. And if you can take a look at this here, we actually have on the biweekly time frame, well, first of all, the biweekly candle, we're going to be getting closed in around 10 hours and 30 minutes and 7 seconds and counting, right? Now, if you observe the low that I'm actually pointing at on the RSI, this is your RSI, right? Relative Strength Index, very stock. It's just, I designed this, I coded it myself, whatever. But if you observe this low, that is very much paired to the candles opening and closing valuation. First of all, I'm going to use divergences here traditionally. I'm not going to use divergences with the wick or range lows. I'm going to use it with the opening and closing bases of the candles themselves. So traditional strategy here, okay, guys? So yeah, we're using the lower low that we're observing here in RSI, which is momentum, and we're observing here the higher low that we're getting in respect to the price action. So of course, I'm not pointing at it at a specific area just yet. Should we maintain above the targets of 2130, well, we're essentially validating hidden drive of phantom bullish divergence. And that would be pretty damn good. Now, of course, this is going to vary as well. Okay, guys. So anything under 51.66%, that would be the great thing. Anything above that, of course, would give us the the probabilities of invalidation. Okay, guys, so far, so good. We have to just reach back to this here in around 10 hours and 28 minutes. I'm going to go ahead and try to create another update video for GME, the community here, into the following day so that we can see how this leveled out. Okay, so that is a very good thing, indicating that there is potential upside in for price action here. Good stuff. All right, so the next thing is that literally within this RSI formation here, we are sitting in an area called the gravitational zone. Now, gravitational zones often work for bounces, right? So typically speaking, if you're talking about the 50% here, if you just go ahead and bring this down here to around 48%, I'm sorry, 46% or 40, yeah, you can do it. You can do it anywhere you want, really. But in reality, I like to do the 48% zone, maybe even the 46 area, right? Because there could be a range of a bounce zone, right? So if we did that 46 bottom and the 54 top, right, then we can identify a zone to where we can experience gravitational pulls, right, or magnetics, as if you will. So in this case here, price action has essentially bounced off before, particularly this point here, right, and this is very confluent to the same area that we're bouncing from now on the exact 2-week time frame candle that was used before. Very curious. Okay, so that is the low of around $20.25, $21.54. All right, so now you got the news here regarding the divergences in RSI, right? Let's go ahead and take this to the next simple thing here, right? We're just going to get rid of this for now, and we're going to eventually use our stochastics and linear volatility as well. So we'll go ahead and just get rid of this line here too for the drive of divergence, and we'll take a look at it and reload it on another day. Okay, so the next thing I want to go ahead and have you take a look at here would be better looked at from a larger time frame, right? Maybe even the 6-month time frame or even the yearly, really. So we'll take this to a 12-month time time frame. Okay, I want to bring here to you the most, I guess I want to bring to you original quality, right? Different things that other people are not talking about. So stick around, because you are about to hear the occurrences that only happen very, very, very seldomly here for the GME asset. In fact, for the entire market. So let's go ahead and bring this right over here, team. So what we're looking at as far as price action versus the image that you have right in front of you here, let's just go ahead and kind of separate them just a little bit and observe, right? Okay, so yeah, what you're observing here is actually called a breakout strategy. Okay, guys, so you can see your previous resistance up here, your previous resistance top out there, right? And then you have this accumulation period of which stops at a certain point, and then we come back down to validate these areas down here as support before we can actually make that upside run. If you take a look, you know what, why don't we just look at it in a 6-month time frame? It feels like it's just as many candles on there, right? So if you look at this from your 6-month iteration, well, you're going to notice that there is this area here of critical supports, right? We broke out of this zone. Let me just go ahead and point it out to you, right? It would be the better part of this section here, right? This zone here. So our price action, let me get rid of this here. There we go. So our price action essentially busted out of this resistance here. And typically speaking, price action in its original form, right? Traditional price action is suggested to come back down and validate the conversion of resistance into a support. So these are your technical basics here. Okay, guys, you're trading 101, and what we can consider as the some of the more green type of strategies, so that you can understand how typical price action works. Okay, so with upon validation, then we have that V-shaped recovery, which could be introduced as this form here. Okay, so that's presently what this is looking like on a 6-month time frame. All good in the hood. So now, what would determine, other than my typical linear volatility against momentum and geometrics, other than that, what could determine a potential upside into this? Well, number one, and we're gonna get to the iteration that happens, to the occurrence that happens once every 8 years. But here I'm going to introduce you to the occurrence that happens once or twice per year. And that is about to happen in about 10 days and 11 hours. Now, what is that exactly, ARCa? Well, what we're observing, or what we can see here, is that we're going to have a confluent time closure of many, many candles. So for example, this candle here is a 6-month time frame, and it takes 6 months for it to live out its life and then close, right? So in confluence with this, or in concert with it, we are going to experience the 3-month closure as well, literally simultaneously to the 6-month closure. Not only that, the bi-month for 2 months and the monthly all at once in concert. So we're going to have the 1, 2, 3, and 6-month closes all together. Now, what does that mean? Well, there's typically a retracement time, an average, that a candle tends to retrace or decompress back to its median. Okay, so to the median, right? So in this case, let me give you an example, right? A 1-hour candle, right? Or a 1-hour candle, 2-hour candle, 3-hour, 4-hour candle would typically retrace towards its 50% when it's around 7 to maybe 15 minutes to the closing, right? So when it has 7 to 15 minutes left to closing that bar, it'll start decompressing towards the upside if it's red, or it'll start decompressing back to the downside if it's green, typically speaking, and that those odds are pretty damn high. Okay, now if we're going to further the analysis here, how deep can this go, right? Okay, so let's take it there. The 6-hour and 8-hour candles typically retrace around 15 to 20 minutes prior to their close. So they decompress just like that, right? Just like these earlier time frames. The next thing we want to observe is what about a weekly bar, right? A weekly bar would be roughly around 6.3 hours to retrace or decompress before its closure. Okay, what about if you meet the 2 weeks? Well, that would be your 6.3 times, or 6.25 times 2 or whatever. Well, you're getting roughly, just approaching your 13-hour mark for a 2-week candle. Okay, so that means that if 13 times 2 is 26 hours, that would be your month, right? Okay, so that would be then 26 hours for the 1 month to start retracing back towards its median. And we do have the monthly closing, okay? So the monthly does follow suit with all of the other closures, and they all retrace and bounce off of each other. There's a lot of dynamic happening there, and I'm not going to expect you to know that. I'm just giving you the basics here so that you can understand roughly what I'm speaking of. This happens in crypto. This happens in the yields. This happens in Forex trading. This happens in futures trading. It happens everywhere. Okay, so let's go ahead and just talk about the 6-month closure, right? Because the 6-month closure is already within its retrace time. It was roughly around 20 something days, and now here we are retracing back from where it bounced from, right? Good stuff. Here's the upside move first. Since we have this coming in with an upside decompression, well, our 50% retrace would be roughly $27.35. Price right now is at $23.44. Cool. Okay. Now, does that also kind of rhyme with the other monthlies, right? So, for example, the 3-month time frame. Sure. The 3-month time frame, if we measure that, it looks like it's very much at that same valuation. It's Confluent. Okay. What about the bi-monthly? Okay, well, the bi-monthly time frame is indicating a slightly higher target. Actually, it's almost not even worth mentioning because it's only like 36 cents more or something like that. Okay, and now what about your monthly time frame? So the monthly time frame is also retracing here, so that could give us a slightly lower target, right? So that would be around the 25.84. Very cool. So 25.84 to around 27 bucks is kind of the retracement that we're expecting here based on your historical behavior. It's all good, right? If just guys, I'm gonna go ahead and squeeze this in here because I didn't want to do it earlier in the video. I didn't want to seem like a shill. So I am going to start the mentorship for beginners trading and charting again, right? It's going to be starting in July 26th. Go ahead and send me a DM here because I'm starting the enrollment process again for the beginners from the very beginning. Okay, learn how to trade. You can do it live with me. It's going to be an 8-week program for $100. Okay, guys, live, and it's going to be repeated twice a week. And I give a lot of information and a lot of trading tools for the team as well. Okay, guys, make sure to do that and get enrolled here before all the seats are taken. We only have 30 available for this run. Okay, guys, let's go ahead and continue the analysis here for GME. Great. So now we have that average upside of around 27 bucks for that retracement based on those few months. That only happens once or twice a year, right? Of course, because another 6 months close at the December into January. Well, that can be the sort of once or twice, right? Because it's a new year. But anyway, here is what happens once every 8 years. This is the well-anticipated crazy phenomenon that actually happens here, and it's not only it's not only specific to GME, it's actually shared amongst the entire equity line of traded assets, right? So we're talking about securities in general, American assets. We are about to experience the 1 year, 2 year, 4 and 8 year candles closing all at once alongside, again, those other 6-month candles, right? So we're going to have the 6-month candle closing with the 3-month candle and probably the 2-month candle alongside the 1 year, 2 year, 4 and 8 years all together. This is a very significant time and a very meaningful time for GME. Now, let me give you an example here. If we were talking about your yearly candles here, right? These are the candles here. Every year is posted here. So let's go ahead and take a look at some drawings here that I prepared for you and get this thing going. Okay, so here is this. Okay, let me give you the examples, right, of your 4-year and 8-year difference. So this would be the low of the 4-year candle, and this is the high of the 4-year candle, right? It would be the size of this blue box right here. Now, the 8-year low would be right down here, which is very, very similar to your 4-year candle. Now, the reason why it's so similar to that is because in 2017, right here, right, actually, it would be, 2017, right? The opening valuation of this bar was right about here, and we came down as low as this point right there. That's why this is the low of the 8-year candle, right? So the 8-year candle came down to here, and it continued all the way up here, and now we're sitting at 23.44, which means that we are presently very much bouncing from the 50% of both the 4-year and the 8-year. Interesting, right? Now, here is the other thing, though. The bi-yearly candle, the 2-year candle, is worth the bottom side of this area here and the top side of this area here. So we're about to close this and enter the new 2-year candle, right? Very cool. Okay, so what does that mean? Well, that's telling us that we do have a present 50% retracement of this bar, right? That would be at around $38.04. So if you are curious as to what that even is, well, that would be a pump to the upside from the current price of around 61%. 23.60 to around 38 bucks is the decompression level that a bi-yearly candle usually faces. Now, I know a lot of you here haven't really been seeing me for a long time, or maybe you're new to the channel here, but the last time I called a play if I can give you significant times, guys, it was just a few months ago when we were trading at around $9.48, $10. We entered at around that area there. We signaled a potential $21 target from that low. And continuing in that, we also gave you the top side numbers here based on statistics and historical volatility changes that have been noted as significant, okay? Now, what we're doing here in the second call out, I think it was from a $16 or maybe a $17 low to I think it was a $33 high, and that was based on the yearly close, and that is right above right here. So that's at $31.60. We were talking about a potential 33 based on some after hours price, and we ended up catching that upside as well. Very good stuff. Now, if I was talking to you about a retrace based on 1 year, right? Well, imagine what would happen when we have a bi-year retracing, or even when we have a 4-year retracing or an 8th year. Well, we already retraced to the 50% of those years, and now the bi-yearly is getting ready to retrace for its average, right? That's the thing here, that we are well within the time frame, or we're gonna be here pretty soon, that we're gonna get this bi-yearly retrace soon enough. So here over the next few weeks, over the next few months, yeah, I think that we could be at a good position here to continue towards the upside. Now, I guess you're going to ask, well, what about the immediate short term? Well, yeah, why don't we give you a forecast as well for the price action coming in for today's session, right, guys? We are talking about today's Friday, June 20th, right, guys? Right after Juneteenth, and we can determine what could be happening here for price in the more immediate short term and not so macro. But know that in the macro time frame, I am absolutely bullish. Okay, guys, in fact, you can even tell just from the candle structures themselves without any drawings whatsoever. And how is that done? Well, just like I said, you know, you got the 60 to 70% chances of getting a 50 to 30% or 30 to 50% prior bar pullback. This is your gigantic true green outside bar, the one that we just printed last year. And it's also a bullish engulfing. It's a buy formation. And check this bar out, right? So this bar is our new year. What is it doing? It retraced towards its 50%, right? In fact, its 50% is located more along the lines of here, 25 bucks. So it actually dove in just a little bit lower, and now it's coming right back up, right? Now, why would it be coming right back up? Because it's got to decompress. Just like the way the 2-year, just like the way the other ones too, the 6-month and all those candles, right? So that would put things in a very interesting situation for GME. I'm actually bullish. Good stuff. All right. And this is just, I mean, guys, this, I'm not going to mention either. Some of you already know this, but this is a bull flag formation, right? So you know that you can take a trend line from the top end and all the way to the bottom side of that bull flag, and then get, apply it here, and it'll give you an upside target of, I don't know. I'm not going to speak on that just yet, right? Wink, wink. So let's go ahead and continue the analysis here from the more immediate short term before we get people a lot excited here. Okay, guys? Thank you so much for still watching here. I know this is a long video, but it was a very meaningful and special one. Okay, guys? So anyway, let's go ahead and determine trend here for the more immediate short term. Okay, so we definitely have some upside pivots on a 5-minute time frame. We're kind of catching a little bit of contraction, which means that contraction would be deceleration. Think of this as your acceleration in a car, right? You're going to accelerate towards the upside. You're going to accelerate as we expand. You're going to decelerate as we contract, but it doesn't necessarily mean up or down for price, right? Your direction for price would be something through the means of momentum, like down here. So let this be the steering wheel here, up or down, right? With acceleration or deceleration. Okay, let's go to the 10-minute time frame. Great. 10-minute time frame still shows potential upside, and we're contracting just a little bit, so we're slowing down with that potential upside. Okay, 15-minute time frame does show that it has a little bit of contraction, meaning or consolidation, right? We're kind of stuck in the middle here somewhere. Let's go to your 20-minute time frame. Okay, 20-minute time frame does have downside continuation even still, and that's expanding a little bit, right? Okay, 30-minute time frame certainly has some downside continuation as well, and it looks like we're getting close here, right? Hourly downside, we still have downside consideration with some expansion on the buy hourly. We're going to get the targets this way, okay, guys? This is just the way I trade, the unique way that I trade. Okay, expansion with downside still present on a 3-hour time frame. 4-hour time frame does show a little bit of consolidation, however, not a perfect upside pivot. I need this to be pivoted towards the upside perfectly. Here it is. 6 hours worth of downside. If we pick up one of my algorithms here, this is data cells, right, available to you whenever you join the ARCa Bulls trading team. This would show you an ATR low of just around an ATR value of just around 82 cents, 83 cents. That means that your 6-hour time frame from the time that it opens, which is right, this is the opening valuation of it, it can move up a value of 83 cents or down that same value. So since we have a downside worth of that, we would look at the current ATR low, and it's looking like a 22.67 low. Okay, so far we've moved to 23.37, and it's actually bouncing back towards the upside. If we do start this upside on that 3-hour time frame, 6-hour time frame, then that means that we have to go ahead and check to see if we still have upside into the next time frames. Okay, we do have a highly expansive and still on an upside consideration 8-hour time. Let's see, upside considerations are still present on a 12-hour time frame. Very nice, because we did gap up, right? Okay, great. And now your daily time frame certainly firing off a very nice signal here, entering critical expansion with an upside bias, meaning that we're still expanding on an upside, and more importantly, we have a critical upside pivot on your daily stochastic momentum. This is 100% an area where we have retraced before. All you have to do is put a trend line like this, right? And let's go ahead and show those drawings just like this here, right? Here's a gigantic upside, right, from this point here, right? Let's go ahead and take a look at another one. Let's see how this kind of reacts. Right about down here, gigantic upside there as well, right? And even right here, gigantic upside there as well. So that is presently where we are turning from. So there could be actually positive price action on this coming in the short term. By daily time frame is still suggesting a little bit of upside, since it does have that curvature. Very good. And let's see, your 3-day time frame, still a little bit of a kink in there, so I may have to suggest around 4. Yeah, I'm just going to go ahead and suggest 4 days of upside. And maybe we have already done that. I'm not sure. Let's go ahead and take a look, right? Because we have 10 hours to close this. So it would be the value of around $3.31. Okay, cool. So $3.31 would put you to the top side today of around... not today, I'm sorry, just in general, right? So 26.08. So this thing would be jumping towards that 26.08 target. And we were already observing, what do you mean? Look at this. We were already observing that $27 target from where, guys? Of course, from the bi-yearly, from the freaking yearly, from the 6-month, the bi-month, the 3-month, all of those suggesting around 26. Remember, 26 to 27. Now, mathematics gives us that probability as well. I think that this is a pretty good place for us to maybe have a position or two. I don't know. So should there be any continuation to the downside, which, by the way, doesn't show as such, I would probably, well, maybe in the immediate short term, right? I would maybe be looking at some targeting here of maybe in this area down here. I'm not sure if we can actually reach that, but if we could, it would be absolutely massive, right? So more, along the lines of your weekly or your 3-day lows, right? There's a zone here around 22.70, 21.80, and even up to $20.80. There could be some drawdown here, right? Get yourself a long position and probably wait for that long ride towards the upside. Okay, guys? So I think that's a pretty good place to leave off here. Any questions or concerns, you go ahead and reach out to me. Long video, I understand, but I do hope that you did reach some clarity within the strategies that I'm presenting here. Okay, guys? This is looking pretty damn good, and it almost looks like a bear trap is about to happen towards, should we get that downside. Okay, guys, so I wish you well. Make sure to reach out to me should you want to join the trading course, right? And everything will be good. All right, team, thank you so much, and we'll talk very, very scary Jerry soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever, 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 ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night and or day, and I will catch you at the bell mañana. Adios, team. Oh, yeah.